Hello and welcome to Investing for Generations. Today with another edition where I will show you one of my stocks out of my portfolio. This time a big credit card company, and it will be Mastercard. And as always, I will talk a little bit about the history of Mastercard, about the company at all, then go through the financial numbers, take a look at the price, and then we'll give my conclusion if I think Mastercard is a buy right now or not. But before we start, don't forget to subscribe, like, share, and comment. Thank you. Mastercard was founded 1966 as Interbank, and then since 1979 it's firmed as Mastercard. It's a financial service corporation, most famous for his credit cards, and it's the second biggest credit card service company in the world, behind Visa. Then dive into the financial numbers. Mastercard paid a small dividend of 0.52%. But this even small dividend is growing over the last 5 years by a big amount of 24.57%. And it's growing for 9 years now. So we have a small dividend, but a fast growing. That's nice. And this looks like there could be good compound effect over time. With Mastercard, we can see a nice growth in revenue. Over the last 5 years, the revenue almost doubled. It was like 12.5% per year. And an even better picture we can see when we look at the EPS, the earnings per share, because they went up 19% per year in the last 5 years. So that's very nice. If the graphs go from left down to right up, this is just a dream for an investor, and this looks really good with Mastercard. Then just take a look at the margins. We see there are very high margins, very high operating margins, very high net margins, and also very stable. So this looks like we have a very solid business model which just makes money. You should say, or you could say, it's a cash cow. It's a very, very nice business, and I really like this. And also the returns are very high. For example, here the return on equity, but the same you can see with a return on assets and also with a return on investment. So all of these numbers for the margins and returns are just great. It's just a great business. And even better, all of the market of payment and also of credit card using will just grow, as I show you next. By Statista.com, the total payment revenues worldwide will just take another jump. We can see here over the last decade or so, it just went up, and in the estimate of 2023, we will have another jump to 2.7 trillion US dollars in total worldwide payments. And of course, a lot of that will be just operated by credit cards. So Mastercard will have his share of that. And where come this growing from? A lot of this growing just come from the growing of the global middle class. As we see here, the middle class from now to 2030 will go up a lot, almost by 50%. That's a lot, and of course with higher standard of living, the people will spend more money, they will use more credit cards, all the other payment solutions, and Mastercard, as a lot of other companies in this sector, will participate of that for sure. For example, the estimation for India is that the credit card market will grow at a CAGR of 25% until 2025. And also the balance sheet looks solid. We have a total assets to total liability ratio of 1.21, which is not very good, but not so bad. That's okay. This company just earns money all the time, so they will be not in trouble, not now and not in the future. Then, next, take a look at the very interesting management of Mastercard. The president and CEO of Mastercard is Ajay Banga. It's an Indian American born in India and then moved to America. He's the CEO of Mastercard since 2010. And let's take a look at the stock price since. So in 2010, when the CEO took over, the stock price was around $25. And now, currently, we are at $305. This is just a 10 bagger. And this is just a great result, a great performance. And it just gives me a lot of faith that Mastercard is in very good hands here. And this is not just for the past, but even so for the future. So we found out right now that Mastercard has a very, very good business model, and it's a great business at all with high margins, high returns, great revenue growth. But what's about the price? Because the greatest business is, just not good enough to invest in if you can't buy it for the right price. So just take a look at that. So my calculated intrinsic value of Mastercard is $260. The current stock price is $306, a little bit over 300. We are in the market, so it jumps a little bit up and down. I bought my shares on April 20th for $255. So I'm up like 15%. And as you can see, I bought my shares a little bit under the intrinsic value. So that's nice. And now we are 15% over, or almost 20% over the intrinsic value. So the question is Mastercard still a buy? I think on the long run, it can be. It can be still a good price. For me, it's just too pricey to add more shares, and even I don't like to buy shares over the intrinsic value. Even this just small difference between my buy price and the intrinsic value is not the price I wanted to pay, but I wanted to have the skin in the game with the credit card companies because I see the growth in the future. So what's my conclusion then? I see in Mastercard a company with a super solid business model, with a strong market position in a growing market, and in a growing market over the long term. That's very nice, and I guess Mastercard will participate on that as they did in the past too. And all of this market, not just the credit card use, all of the market of the payment, of the online payment, is just the market of the future. And Mastercard, with the market position they have, will participate from that a lot. So on the long term, I think Mastercard is just a great investment, even if it's maybe a little bit pricey right now. Then just take another short look into my portfolio. My portfolio still looks very green, and as we can see, also Mastercard, as I mentioned, is up almost 20%. And then also take a look at the proportion of my portfolio right now with the adding of Mastercard. It's my third biggest position here with 7.55% of the portfolio. Then also take a short look at the performance against the S&P 500. I started this portfolio at the 2nd of December. This is why also the diagram starts there. And since then, up today, my portfolio outperformed the S&P 500 by exactly 19%, or a little bit under 19%. That's a very nice performance. I like that. Even if I mentioned before, it's just a short term, but at least it's nice and a nice look. That's it for today. I hope you enjoyed. Just another step to show you all of my portfolio and on my way to financial freedom. So see you the next time with another stock out of my portfolio. But before I leave, don't forget to subscribe and ring the notification bell so that you never will miss another video. And if you like the video, of course, give me a big thumbs up because this helps my little channel so much. Thank you for that. See you soon. Bye bye. Take care.